The bottom line is supply-demand economics mean that China's paying more for silver than we are. That's it. Two, why is China buying the silver? Because they're applying it more aggressively in industrial use. So solar silver, they have 80 to 90% of the solar silver chain. So they're basically dominating the market, almost cartelling it, which is why, side note, why I've been saying that I think there's going to be a silver OPEC type of situation. So a SIPEC coming out of this relationship between Latin America and China.
Chinese silver imports could surge in the coming weeks as traders take advantage of a jump in demand that's taken prices well above the international market. Silver's in a sweet spot because of its dual uses as an industrial metal and a financial asset. It's an important material in solar panels, which China continues to build in vast quantities, and it's also a cheaper alternative to gold, which is setting its own records on price, led by Chinese demand. VinceLanci is the managing partner at Echobay Partners LLC and has extensive experience in commodities trading. From a technical standpoint, VinceLanci discusses recent silver market developments, revealing that Chinese buyers purchase silver concentrate in Latin America at high prices, securing supplies before refinement. China's industrial demand for silver is significant, as it is essential in various applications such as electronics, solar panels, and automotive components. However, silver could limit its downside, as supply could fail to keep pace. Regarding China's growing interest in silver, Vince predicts that China's growing control over silver supplies will have significant economic implications. According to global data, China will be the world's second-largest producer of silver in 2023, with output down by 7.52% in 2022. Over the 5 years to 2022, production from China increased by a CAGR of 0.27% and is expected to rise by a CAGR of 3% between 2023 and 2027. Furthermore, VinceLanci emphasizes shifting focus from traditional vault metrics to understanding silver's source and destination, noting the increasing flow from Latin America to China. Now we present the clips of VinceLanci's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Last week, Chris Marcus from Arcadia and myself, we sat down with, we had a conversation with a Latin American mining executive. And the purpose of the conversation was to learn a little bit more about the concentrate and doré bar side of precious metals, specifically the silver aspect of it. And what we came away from that conversation with was more than we had hoped, specifically confirmation of information that I had coming from the China side of the supply chain. There were claims made by these people in China that they were buying concentrate in Latin America. And that was confirmed. And on top of it, the prices that were being offered for the concentrate were off the scale, historically speaking. And we had a nice conversation with the executive on that topic. And I'm putting that out in a two-part post. Part one, which is what we're going to talk about today, is the bottom line. China is effectively laying claim to Latin American silver before it is refined and crowding out Western buyers by paying higher prices for ore without directly affecting spot price, right? So coincidentally, today, Bai Xiaojun posted that the market data on SGE and SFE were out, but he also noted that CN Customs, China's customs data in June, 110 tons of silver ingots, which is silver bars, and 100 and whatever tons of silver concentrate, which is equal to about 1,400 tons of refined silver, were imported. That's a big increase to May. Now, the key word is silver concentrate there. And Chris and I recently, here's basically what I just said, right? Discussing silver supply chain dynamics from a miner's perspective. During that conversation, I expect an important corroboration was given regarding China's actions in Latin America. The final result is, okay, so these are the parts of that part one. I'm going to give you a quick breakdown of it. The bottom line is supply-demand economics mean that China's paying more for silver than we are. That's it. Two, why is China buying the silver? Because they're applying it more aggressively in industrial use. So solar silver, they have 80 to 90% of the solar silver chain. So they're basically dominating the market, almost cartelling it, which is why, side note, why I've been saying that I think there's going to be a silver OPEC type of situation. So a SIPEC coming out of this relationship between Latin America and China. Third, we go into China's negotiation style, trade negotiation, how they get these deals, what they do. Fourth, two examples. Trinidad and Tobago is one example of this style, and Argentina is another. Two that we witnessed personally, firsthand, from experience analyzing market structure, and an overview of part two. And so basically, that'll be like a reconstruction of the interview, a private interview, and there's the link to that. Right. So I would say if you're looking, if you're a vault watcher, the vaults are up, the vaults are down. For about a year, we've been saying that the vaults don't matter in the traditional way anymore. The silver trade is not a stock trade. It's not how much silver is or is not in the vault. It's where it's coming from and where it's going to. So the vault has become a toll booth. Checks in, it gets weighed, and it goes to China, right? So now you have to look at the China vault, and it checks in, it gets weighed, and for the most part, it disappears. Now, they've had a recent influx, but the point is, you want to know where the silver is coming from and going to now, because the vault is really just a weigh station. So moving from vaults, what matters? Well, who's getting it and who's receiving it? So you want to go to the ends of the supply chain, right? We know who's receiving it, and we know where it's going. We're, not literally, figuratively tracking it out of the vault, what's happening to it. We want to know where it's coming from. And we know it's coming from Latin America increasingly now.
During the interview, VinceLanci discusses recent gold market activity. He notes that despite a weak 6-day period, Friday's trading was encouraging and suggests a potential 1 to 3 day upward move. Concurrently, Vince discusses the upcoming FOMC rate decision, noting that the market expects a rate cut in September. Gold has risen to $2,391.89, driven by expectations that the Federal Reserve may cut interest rates in September, leading to a drop in U.S. Treasury bond yields. Lower yields weaken the U.S. dollar, boosting gold's appeal. Traders are cautious ahead of Wednesday's Federal Open Market Committee meeting results. Key U.S. macroeconomic data, including the non-farm payrolls, NFP report, may influence gold's direction. Based on fundamentals, VinceLanci expects the Fed to keep rates unchanged on Wednesday, with potential news of a September rate cut to be revealed during the conference. He notes that the market is bullish, with potential for significant movement depending on the Fed's announcements. Let's get back to the interview.
Gold, we discussed at length this weekend in a two-hour founders discussion, which we're going to share with Premium as well, obviously. We do every week. That basically said Friday's activity in gold. This was a very weak, 6 days. And this day on Friday was very encouraging, at least for a 1 to 3 day move higher. So we're in the middle of the 1 day move higher right now. Let's see how the rest of the week shakes out. We have a detailed explanation of the committed traders and who's doing what. Quick adjustment. It's a big data week in the sense that on Wednesday is the FOMC rate decision. I want to spend a second on that to prepare you for the week. The marketplace, the prices in the market as they currently exist, a almost 100% chance of a rate cut in September. If there's going to be a rate cut in September, it can very likely be announced Wednesday. On Wednesday, he could just come out and say, we're going to have a rate cut in September. That's not a July rate cut. That's a September rate cut, and it would fulfill what the market thinks. There is also talk of a July surprise rate cut, meaning he comes out and says, I'm cutting rates today. While that's possible, so when he comes out on Wednesday and makes the rate decision, it'll be unchanged. And then at 2:30, there'll be a conference, and the conference will say, we're going to cut in September, right? So it's almost like there's two rate decisions this Wednesday. There's Wednesday where he says, we're lowering rates or we're not lowering rates. Assume that he's not lowering rates with a chance that he could. And then in the conference at 2:30, he's going to say, we're going to lower rates in September, or we're not going to lower rates in September. Now, the market is very lopsided, expecting him to lower. Okay, so, and there's a lot of cash on the sidelines, so it really could move higher if he does cut, which makes no sense in the sense that we're on the all-time highs and the market can move higher. But, rate cuts generally are when they start, that's generally the high in the market. But on the day that the rate cut is announced, it would be very bullish if it happened. And on the other hand, if it doesn't happen, you might have some disappointed bulls. But as we can see with the rest of the world going to shit, the markets don't seem to care about anything in Israel or in Ukraine or, unemployment upticking or, inflation under control, but not gone at all. So it's a big week, and the focus of the week will be on Wednesday's rate cut decision. So think of it as two rate cut decisions again. All right. So
Metals Focus anticipates another strong year for silver demand in 2024 and calls for a deficit of 215.3 million ounces, driven partly by continued stagnation in supply alongside another record year for industrial demand. Additionally, silver prices may find support as the dovish sentiment surrounding the Federal Reserve's policy stance could support demand for the non-yielding asset. Lower interest rates attract buyers toward assets like silver. How will China's growing control over silver supplies influence the silver market and investment strategy soon? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.